Hey traders, Raghee here, and in this recap video I want to talk about time frames from the standpoint of how you experience the market. That's something that I think comes up quite a bit, and I'm hoping you'll get some value from understanding that your experience in the market is going to be as much affected by the time frame of the symbol you're watching as it is the symbol itself. And let's talk about this for a moment. There are a couple different ways I look at the markets. One would be, say, the weighting of a particular stock within the context of its ETF, or the different sectors and their weighting within a larger, broader average. But then I also break down names according to the time frame. And it could be futures, it could be Forex, it could be stocks, ETFs, it doesn't matter. What the point is, in this particular layout might look very, very busy, and I acknowledge that for sure. But what I'm looking at from top to from bottom to top is 1, 5, 15, 30, 60, 120, 180, 240, 480, daily, weekly. Now, what time frames you choose, completely up to you. Someone might like a 1, 3, 13. You know, there's a lot of different variables with the time frames you look at. So I'm not here to tell you these are the time frames to watch, but what I'm here to tell you is that you want a assortment of time frames that take you from a very small slice of psychology to a very long slice of psychology, because the structure, just a la Charles Dow, the market structure could look very different. In fact, the direction can look very different. Today, for the most part, in the beginning of the day, we were looking to the long side, and then the 1 minute shifted during the lunchtime doldrums between 11:30 and 1:30 Eastern, and shifted to where I was looking only for shorts through the second half of the day. So long in the morning, short in the afternoon, and that was through, say, a 1, 2, 3, 5 minute time frame, even maybe out to a 15. But if you step out to a 60 minute, if you step out to a 120, a 180, 240, what you have is predominantly a lot of volatility, no doubt about that. But what you have is predominantly an uptrend. Sure, the market pulled back a little bit, but that pullback was really clearly a 1, 2, 3, 5, maybe 15-minute experience where, say, today, when I'm looking at a 480-minute time frame, it's a time frame that I'd like to get long on, this was barely even a correction. So this might seem like an obvious point, and I realize that sometimes we talk about very advanced topics and other times we break it down to very simple stuff, but it never hurts being reminded of the simple stuff. What time frame are you watching, or what time frames more appropriately are you scanning to find the one with market structure, to find the one that's going to allow you to play today's psychology, or are you simply using today's psychology to carry you to a different time frame trade? Another example would be crude oil today. Case in point, earlier this morning, much earlier, on 7 a.m., crude oil got hit by a tweet. And you can see this is a 50-minute candle. It's at 7:15. The market got hit by a tweet. I can even go back to the 1 minute chart and we could look at what that was down to the minute. But the market got hit by a tweet which was from the president about OPEC and higher prices. This wasn't about whether or not we were going to buy more oil, export more oil. This wasn't a tangible number type news. This was just a headline psychology where traders decided that they should short crude on this news. Now, by the way, in the premium video, I'll talk about how we're pricing options in crude to take advantage of this move. But this was a move that was experienced as a downtrend, as weakness, very sharply across shorter term time frames, including, actually getting up to the 240, the 180, the 120. This market was sent sharply lower, in many cases even breaking trends that were in place, like the 240. But it was the daily that kept the green grab candles going and traded down to a level that we want to start looking for pullback buys. So the experience of a 1, 2, 3, 5, 15, 30-minute time frame in crude was one of bearishness during today's session, and even downtrends and breaking up trends. But on the daily, this is still very much a market that's maintaining overall strength, printing green grab candles, and we'll look for a buy. So 1 minute I might be short, 5 minute I might be short, but daily we're looking for a buy. So the way in which you experience the market, probably even more so than the symbols that you're watching, are the time frames that you're watching. Think about that. Think about the price movement ranges that affect it. I'll get into how we quantify what price movement range expectations are, what tool we use and how we do it. But let's start with this conversation here, and I'll see you in the next update.